What is happening, Bitcoin Bulletin viewers? The market is absolutely electric right now, and things are moving faster than ever. We've got seismic shifts, unexpected drops, and major players making bold moves that could redefine the financial landscape. Are you ready for the unmissable updates that everyone will be talking about? We're diving deep into the action, bringing you the insights you need to stay ahead of the curve. Get ready, because this is Bitcoin Bulletin, and we're kicking things off with a bang. First up, we're tracking a significant price movement that has analysts on the edge of their seats. Is this a temporary dip or the start of something bigger? We've got the details on where Bitcoin stands after a crucial support level was breached, and what it means for the rest of the market. Then, we're shifting gears to a corporate titan that's making waves in the traditional finance world. This company, a major holder of Bitcoin, is on the cusp of a monumental inclusion that could fundamentally alter its trajectory and signal a new era of acceptance. You won't want to miss this story. Next, we're peeling back the curtain on seasonal trends that have historically dictated market behavior. What does the data tell us about Bitcoin's performance this month, and how should investors be positioning themselves? We're breaking down the patterns and providing actionable advice. And finally, we're heading over to the prediction markets where the action is heating up across multiple arenas. From crypto price swings to major sporting upsets, we're seeing fascinating odds and bold predictions shaping the narrative. Stick around because you need to know this. Don't forget to smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Bitcoin's price plummets below a critical threshold. This sharp decline signals a potential shift in market sentiment, with major cryptocurrencies and related stocks experiencing a downturn. Bitcoin's price has recently dipped below the significant support level of $110,000, a development that has put analysts on high alert and sparked concerns about a potential substantial pullback in the leading cryptocurrency. As of the latest reports, Bitcoin's value has seen a 2% decrease over the past 24 hours, settling around $109,500 after reaching a high of $112,600 just a day prior. This downward trend isn't isolated to Bitcoin. Other major cryptocurrencies like Ethereum, ETH, Solana, Sol, and Cardano ADA have also experienced declines exceeding 3% in the same period. The ripple effect is also visible in the stock market, with companies heavily invested in or associated with Bitcoin facing pressure. For instance, MicroStrategy, MSTR, a prominent corporate holder of Bitcoin, has seen its shares fall by 3.2% in the last 24 hours, adding to a more significant 30% drop since the beginning of July. Similarly, KindlyMD, NAKA, has experienced a dramatic plunge of 75% since mid-August, underscoring the broad-based weakness across the crypto-linked equity space. This downturn occurs as the market enters September, a month historically known for its volatility and negative performance in the cryptocurrency space, often referred to as Red September. The current broad-based decline at the start of the month is intensifying worries among analysts about further downward pressure, particularly as volatility in the broader stock market appears to be worsening. Data from Bitfinex indicates that Bitcoin is now in its third consecutive week of retracement from its August all-time high of $123,640. While historical bull market corrections in the crypto space have typically averaged around 17% from peak to trough, suggesting a potential bottom is near, not all experts share this optimistic outlook. Some analysts are forecasting that Bitcoin could fall below the $100,000 mark in the coming weeks. Traditional financial institutions often refrain from providing price targets for cryptocurrencies, but a look at Bitcoin's 3-month performance reveals a gain of 8.25% over the last 12 weeks, offering a glimmer of positive performance amidst the recent turbulence. Analysts are divided, with some predicting a market bottom while others foresee a drop below $100,000, fueling intense debate among investors and the wider crypto community. But is this the calm before the storm, or a sign of deeper market shifts? Stay tuned as we break down what's next for Bitcoin and the broader crypto market. MicroStrategy's S&P 500 ambitions could reshape finance. This corporate Bitcoin giant is nearing inclusion in a major stock index, potentially unlocking massive institutional investment and validating its crypto-first strategy. MicroStrategy Inc., a company synonymous with its massive Bitcoin holdings, is on the verge of a significant milestone: potential inclusion in the prestigious S&P 500 index. Market watchers and analysts are buzzing with speculation that an official announcement could arrive as early as September 5th. This potential inclusion is fueled by MicroStrategy's ever-growing Bitcoin reserves, which now stand at an astounding 636,505 BTC, valued at approximately $70 billion. Just recently, the company acquired an additional 4,048 BTC for $449 million, further solidifying its position as a leading corporate Bitcoin holder. This strategic accumulation has not gone unnoticed by the market. MicroStrategy's stock, MSTR, has seen a rise of 1.44%, trading around $339.24. Crucially, its market capitalization has surged past $96.84 billion, comfortably exceeding the S&P 500's eligibility threshold of $22.7 billion. The prospect of MicroStrategy joining the S&P 500 has ignited widespread discussion. Prominent figures in the crypto space, such as Josh Mandel and Lark Davis, have voiced their support for the company's addition. Mandel, who previously predicted Bitcoin's ascent to $84,000 by March 2025, suggests MicroStrategy might already be a de facto member, awaiting formal confirmation. Analysts at Benchmark have also endorsed the move, citing the company's robust financial health and liquidity. Despite ongoing criticism regarding its capital-raising tactics, Benchmark maintains that MicroStrategy's recent equity issuances were necessary strategic maneuvers to sustain its aggressive Bitcoin acquisition pace. The implications of this potential inclusion are far-reaching. Stevens Inc. estimates that index-tracking funds might need to purchase around 50 million MSTR shares, totaling approximately $16 billion, upon its inclusion. Such a capital influx would not only bolster MicroStrategy's valuation, but also serve as a powerful testament to the increasing acceptance of crypto-related assets within traditional financial frameworks. Its prior inclusion in the Nasdaq 100 in December 2024 was already a landmark event, and an S&P 500 listing would further cement its role as a critical conduit between the burgeoning digital asset market and established financial markets. MicroStrategy's evolution from a software provider to a Bitcoin-centric treasury has been a subject of intense debate. Critics point to its aggressive fundraising, including stock issuances to fund Bitcoin purchases, which have sometimes led to short-term stock price declines. However, benchmark analysts argue that these dips are more attributable to broader market sentiment and macroeconomic factors than to fundamental flaws in the company's strategy. They emphasize that MicroStrategy's earnings, even if largely derived from unrealized Bitcoin gains, meet the S&P 500's profitability requirements. The S&P 500 Committee's past decisions to include companies like Coinbase and Block indicate a growing openness to digital asset exposure. Nevertheless, MicroStrategy's high volatility, with a 30-day price volatility of 96%, surpassing even tech giants like Tesla and Nvidia, could pose a challenge for an index that typically favors stability. However, its substantial market cap, liquidity, and industry influence might outweigh these concerns, especially as the cryptocurrency sector continues its integration into mainstream finance. This potential S&P 500 inclusion could redefine corporate treasury strategies and accelerate institutional adoption of Bitcoin. Will this move signal a new era for crypto in traditional finance, or are there still hurdles ahead? Next, we look at the historical patterns that might predict Bitcoin's path this September. Bitcoin's September seasonality, history and future outlook. Historical data suggests September is often a down month for Bitcoin, but current market catalysts could challenge this trend. Bitcoin's performance in September has become a well-debated topic among investors, largely due to its historical tendency to decline during this month. Data since 2013 indicates that, on average, Bitcoin experiences a drop of between 3% and 5% in September. Out of the 15 Septembers recorded since Bitcoin's inception, 10 have closed in negative territory, with the most significant downturn occurring in 2014 when the cryptocurrency lost 20% of its value. This historical pattern suggests that a price decrease is statistically more likely than an increase this September. However, history is not always a perfect predictor, and exceptions exist. Bitcoin has seen positive returns in September in recent years, including 2023 and 2024, with the latter posting a gain of over 7%, marking its second-best September performance ever. Therefore, while the historical trend provides valuable context, it should not be treated as a definitive forecast. More significantly, the performance of Bitcoin in the months following September has historically been very strong. October and November are typically among Bitcoin's best-performing months, with average gains approaching 29% and 38%, respectively. This suggests that the fourth quarter often ushers in a bullish period, though again, there's no guarantee that past trends will repeat. Adding to the bullish outlook for the remainder of the year are numerous positive catalysts currently influencing Bitcoin. The increasing adoption by dedicated crypto treasury companies, corporate treasuries, and even governments, coupled with massive inflows from spot Bitcoin exchange-traded funds, ETFs, and growing general acceptance as an investable asset, are creating substantial buying pressure. Simultaneously, the newly issued supply of Bitcoin is significantly outpaced by routine buying activity, leading to its tightest supply conditions ever. For investors looking to navigate potential September dips, attempting to time the market by waiting for the perfect entry point can be a losing strategy, especially when holding cash on the sidelines. A more prudent approach is to implement a dollar-cost averaging DCA strategy. This involves consistently purchasing small amounts of Bitcoin at regular intervals, ensuring that investors automatically benefit from any dips, while also accumulating the asset during price surges. Over the long term, DCA is designed to smooth out volatility and capitalize on the asset's overall growth. Another key strategy for managing Bitcoin's seasonality is careful portfolio calibration and diversification. For those who are more risk-averse, allocating only 1% to 5% of their portfolio to Bitcoin can mitigate the impact of price swings. This defined allocation prevents any single asset from dominating portfolio outcomes during volatile periods and helps maintain emotional stability. Once a DCA plan is in place and the target allocation is set, investors may consider using additional capital to buy more Bitcoin than usual during a September dip. However, for the majority, a consistent DCA approach is sufficient and less demanding. In conclusion, there is no need for fear regarding Bitcoin's September seasonality. A well-defined investment plan, including setting an allocation, automating purchases, and allowing time for growth, provides a robust strategy regardless of short-term market fluctuations. Investors are advised to use dollar-cost averaging and maintain diversified portfolios to navigate seasonal trends effectively. While history offers clues, the current market dynamics present unique opportunities and risks. Now, let's see how these market predictions are playing out on the prediction markets, including a surprising sports upset. Prediction markets buzz with crypto swings and upset alerts. From forecasting Bitcoin's price to predicting NFL outcomes, prediction markets are capturing the week's most engaging uncertainties. Prediction markets are abuzz this week, with activity spanning the volatile crypto landscape and the high-stakes world of professional sports. On the crypto front, market sentiment appears to be shifting bearishly on Bitcoin following recent all-time highs, with odds swaying towards lower price targets for major assets like Solana and Bitcoin. Over $40,000 has been wagered on various predictions concerning the future movements of these key cryptocurrencies. Simultaneously, a new flash market has emerged, offering intriguing odds for a significant underdog in the National Football League, indicating the diverse range of events capturing market attention. Whether your interest lies in finance, sports, or pop culture, these prediction markets provide a fascinating glimpse into collective foresight and risk assessment. One of the most closely watched markets involves Solana's price trajectory. Validators of Solana's high-speed Layer 1 network recently approved a substantial upgrade to its consensus protocol, aiming to enhance network speed and efficiency. Analysts suggest that anticipation surrounding this upgrade could potentially propel Solana's native token, SOL, to $250 by the end of the year. However, the market is also considering the possibility of a significant price drop to $130. Predictors on Myriad are tasked with forecasting which of these two price points, $130 or $250, SOL will reach first. As of Thursday morning, the market favored the $250 target, with 69% of predictors assigning it a higher probability. A sentiment that has seen a slight increase in the past 24 hours despite SOL experiencing a roughly 3% slump to $204.79. Technical analysis from the previous week indicated a positive, albeit slow, price trend for SOL, which currently sits about 30% below its January all-time high of $293. Coupled with growing interest from publicly traded digital asset treasuries and the potential for ETF approvals, near-term price catalysts appear possible. A move to $250 would represent a nearly 22% gain from current prices for SOL holders, while predicting this outcome on Myriad could yield around a 33% return for hedgers. Decisions on delayed ETF applications are anticipated as soon as October, adding another layer of potential influence. In the Bitcoin market, after reaching an all-time high exceeding $124,000 just 22 days prior, a recent slump has led predictors to weigh in on whether the top cryptocurrency can maintain a price above $105,000 throughout September. Currently, bears seem to have the upper hand, with 66% of predictors betting against Bitcoin holding that level, suggesting an expectation of a dip below $105,000 within the month. These odds have notably strengthened on Thursday, showing a nearly 20% increase favoring a fall below $105,000 in the last 24 hours. Bitcoin's price has mirrored this sentiment, dropping around 2.3% to $109,750, which is only a 4.5% difference from the $105,000 mark. While Bitcoin holders would face a 4.3% loss if the price drops to $105,000, those hedging on Myriad with a yes position throughout September could potentially gain around 67%. Bitcoin investors will undoubtedly be closely monitoring the charts during this historically challenging month for the asset. Beyond crypto, the NFL season kicks off with a high-profile divisional matchup between the Dallas Cowboys and the Philadelphia Eagles. While the Eagles, the defending Super Bowl champions, are heavily favored, Myriad's prediction market is posing the question of whether the Cowboys can pull off an upset. Currently, predictors give the Cowboys only a 20.4% chance of victory, translating to odds of approximately plus 390. This offers a potentially higher return compared to traditional sportsbooks like DraftKings, which list the Cowboys at plus 320. Kickoff is scheduled for 8:20 p.m. ET on Thursday night. These diverse prediction markets highlight the interplay between financial forecasting, technological advancements, and sporting outcomes, offering unique opportunities for engagement and potential profit. From market predictions to historical data, we've covered a lot of ground today. And that brings us to the end of our update. Make sure you're subscribed so you don't miss what's coming next. That's all the news for today, but what a ride it's been. Bitcoin saw a significant price drop, breaching key support levels, while MicroStrategy's potential S&P 500 inclusion could be a game-changer for institutional crypto adoption. We also explored Bitcoin's historical September slump, but noted current catalysts might alter the trend. And prediction markets are alive with bets on crypto price action and even NFL upsets. Don't miss our next update. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, leave a comment with your thoughts, and follow us on all social platforms for more real-time insights.